You could tell us what reports have shown recently with what the banking sector thinks is going to happen with gold.
Yeah, I mean, you've seen banks that for years have kind of resisted to showing projections on gold going higher because it doesn't really work with their investors and what their strategies that they have are. But right now, I think it's also they don't want to be wrong. You know, they don't want to be wrong over and over again. They want to kind of give you an understanding as far as how things could be going. And there were some pretty big banks this week that made some pretty large projections, including Morgan Stanley, Citigroup, and then Goldman Sachs. And the projections have risen by several $100s an ounce for many of these banks this year. Morgan Stanley saying as high as $3,400 per ounce by the end of the year. Citigroup saying $3,500 by the end of the year. And the big one was Goldman Sachs that said under extreme circumstances, they could see $4,200 by the end of this year. For many people, they can't comprehend that the number could go that high. They think that, that immediately when something gets to a certain level that it has to come down. But, we've seen it with other asset classes as well. It's not unusual for things to go on these runs when you hit these resistance levels and break through. And for the people that are out there right now that are saying, I missed it, you and I heard that at $500 an ounce.
Yep,
we heard it at $1,000, $1,500, and everywhere along the way. You've got to stop looking at this as the price and look at it for what it really means, that the dollar is not valued worldwide, and that's why so much buying of gold is happening at these levels and continues to happen regardless of where the price is.
I mean, you and I 5 years ago would never have thought Goldman Sachs of all of all news sources would or banking news would ever come out and say something like 4,200 an ounce. I mean, that's surprising, which also kind of leads us to the idea, are we still trading a commodity here? Or do you believe the central banks are looking at this more as like what money really is worldwide?